The best stop placement I've found so far are smaller structure highs and smaller structured lows. My name is JT and I have a trading school where students without prior experience make sometimes $400 to $1,200 within just a single week using this strategy with a not real money account first, and sometimes within the same time they made out of $200, $500, $3,000 the same amount again. Day trading futures, and it's very time efficient, just trading by 1 or 2 hours between Monday and Fridays. And we use a 1-minute chart and indicators that is called the anchored VWAP and a 1-day VWAP. So the thing is with the 1-minute chart, when we have 60 candles within 1 hour, there will be some days where we have just a lot of green candles or just a lot of red candles. And the color switch, the advantages that you always have, for example, when we want to sell, we have the green candle, then we have the red candle. And the green candle shows you how strong the buyer pressure was. That means when you look at every green candle while the market was structuring down and it goes smaller and smaller, you know already by now then for the future green candle that maybe the next candle is going to be a red, and the red one has a very high chance that there are 2 or 3 continuously in a row candles are going to happen. So the advantage of day trading futures is that we don't need $300,000 and we can just do that with a $2,000, $3,000 account. And we can say if there is a red candle, sometimes there's a timer, it depends on your trading platform, or TradingView on the right side, or Zero Chart, or other trading platforms that have a timer and that is counting down within 1 minute, 60 seconds. And when you enter the trade 2 seconds or 1 second before the candle closes and the red candle is very small, then you can adjust with money management. Please use first a not real money account, a demo account, when entering after the red candle and having the stop placement above the color switch. When it's a green and a red candle in combination and you enter always at the red candle for a sell, then it depends on what is the highest wick and how much length does it have. When the length is small enough, we're talking about ticks, pips, or like not the points is very important too much. We're talking about the price measurement and we're talking about 4 ticks or 7 ticks or 9 ticks maximum. But the length you see that the market is going down is with 25, 50, 70 ticks. Then here's the thing. If you have the color switch of a green and a red candle and there are lots of red candles before and the green candle is small, then you know that the dominant side is the selling side. That means now when entering actually with any red candle almost, but the color switch is one of the most efficient thing because there's the buyer side that was small, then you have the red candle, and when you enter now after the red candle closes with the stop placement above, you have now the risk reward ratio. If that's going to be 7 ticks, for example, and the next 3 red candles or 20 red candles that are going to occur with a couple of green candles in between is going to be a 30 tick movement. Or like, so let's just say 7, 14, 21. Let's just say like you have 21 ticks. Then you have a risk reward ratio of 3, it's called. That means when you can adjust within the 7 tick stop placement, this would be around $80, $90 of stop loss. But the 21 ticks would be around like $250, $300 of take profit. And this is called the risk reward ratio. And this is something what is very important when trading the 1-minute chart, to place the stop always on color switches. Why? Because also traders have their stop placement. That means when you see that the market is going down, comes back with a couple of green candles and continues to go down, then you have an apex in the chart. And this apex means that you have a lot of sellers and they place their stop also there, and people would lose money if the market goes there. Sometimes the market will go there for once, and then when there's still lots of red candles and you can see the angle of the market is still down, that the market continues. But if the market has 5 green candles, for example, in between, or like 7 green candles or 15 even in a row, sometimes there's just like 1 or 2 red candles in between, this would indicate pressure. Or if you see that the market does a couple of higher structure lows, for example, the structure is higher, this could also indicate that the market is reversing. Usually you will find bigger structure highs and bigger structure lows nearby. That means when the market is going down, we have a green and a red candle. And we're going to look at green and red candles in combination. How many green or red candles do we have to see like green is the buyer side, red is the seller side, and what target does the market have? That means If you have a low, this is just an apex in the market, what the market would like to touch. Did the market reach the target yet or not? Whatever indicator you use, if it's a 1-day VWAP, an anchored VWAP, or in this case, it is just going to be a high or a low, would be the most efficient thing. You can even use a 1-day chart and just from every previous 5 days, the highest and the lowest point of the wicks of each candle, because each candle would be said like the yesterday high, the previous day highest point, lowest point, right? This is what the market this is where the market likes to go at, because it's an auction process of back and forth, buy and sell. And there will be days where you see that the market does a lot of red candles, where you see literally a green candle that is more smaller in combination, it does it over and over again, and then the small red candle. And when you enter the trade after the small red candle, now it depends on leverage, adjusting the trade within the range that it's $100. And very often, just when there are like 5 red candles within the next 15 or 35 minutes, you will have a $500 of profit. Students of mine are doing this so far, and within the first 3 to 7 months, they're able to execute that, as you see within the results or the other videos. Let me know in the comment section, by the way, how you like this format. But or if you would like to see me explaining this on the chart, I'm keeping it so simple as possible and hope that it will improve your trading.